Hey everybody, it's Mike from Orderflows and welcome to today's video. Today is Wednesday, January 25th, 2023. And, we ended up the day, slightly lower for the day. Not much change, but if you're just looking at, what the net change was for the day, I think it was kind of a quiet day, but actually, it was quite the opposite. We opened up last night and proceeded to sell off. Then when Europe came in, sold off some more. When the U.S. session cash opened up, we sold off some more. It made new lows just right after the cash opened, and we kept going lower. Then we put in this tremendous rally from, the low was 63 and a quarter all the way up almost to, we got up to, the opening price. Didn't take out the high, but you can see right now in the evening session, we just reopened a little while ago. We are starting to march back up, testing yesterday's or the previous session's high. So what I want to talk about is, what were some of the interesting signs in the order flow from the time the cash opened? Like I said, we were under this pressure mostly overnight. This was the 5 o'clock reopen over here and into Asia. We're just sort of trading near our lows. London opened up at, what was that? 1, 2 o'clock here. This is 2. Right here, and then we started to sell off some more into new lows, lower, 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 and then we rallied. So let's take a look at the order flow. And again, coming into the cash session, 7 o'clock. Okay, so we started making here at 7:30. Started making new lows again. Taking out 95.5. Getting down to 94 and just marching down. You don't really see any bounce yet. Okay, and 740 there was, we finally got a green bar coming in here, but then it just kept marching down lower. Every time we hit the low, never really rallied up at all. Now, if you remember some of those videos I was posting last week talking about divergences, right? Now, granted, this market had been selling off all night, and when we're coming into the U.S. session, okay, you can start seeing, some more divergences. You see sort of this triple bottom here. It hit it at 7:51, 7:58, 8 o'clock. We got a couple divergences here. It came in, took it out, and then we bounced up around just after 8 o'clock. We had a little bit of a bounce from this new low at 85.5 up to, 91.5. So about a 6-point rally, then going sideways. Now, at this point, right, you're not going to really want to take any position ahead of the cash open because you don't know which way it's going to go. Although granted, it's been under pressure all night, so probably to the downside. And we get another divergence. Okay, so 8:32 we have a divergence, and back here at 7:58, 8 o'clock we had a couple divergences. So we took those out. And again, I like to trade failed divergences. So I'm looking to get short here. Now the only issue that I have with this trade like this is this happening right after the cash open. Now, I like to let the market settle, right? I worked on a trading desk for 2 decades, and I know up until the cash close, the cash open is going to be the busiest time of the day, right? It's going to be the time where the execution desks have all these orders that start on the cash open, VWAP. The entire trading day, or VWAP for the first 5 minutes, VWAP for the first hour. And I like to just based on my own experience, I know how the cash open can move, and I just like to let it settle. That's just me. So I'm not really looking to take any trade, even though, I honestly, I probably would have liked to have sold it here around, to these new lows. If this was like, say, 9:30 as opposed to 8:30. Did it make a new low? Yeah, technically it did. I mean, you can see if you had to stop in here to get short just below this low, let's call it 83. It trades down to what, 80 and a quarter. Fair enough. Technically, yeah, it did make a new low. Yeah, look at me, I'm right. But I'm not going to get much out of that trade. For me, this would have been, getting short here wouldn't have been a good trade location. However, we get another divergence. This time we have a divergence and a ratio. So we have a new low with that positive delta. This time we have a bullish ratio. It's telling me there's price exhaustion at this low here, right? That's this blue number, 34.25. And for me, that is a bullish signal. So, even if I had gotten short here at 83 getting this bullish signal after that is, a sign to get out of the trade, take the loss, rather than let it come up here, stop you out wherever your stop is going to be. Because while I have 3 failed divergences, in this case going down, I'd be looking for a trend day down. Granted, it's already been trending down anyway. I'm a little worried about my capacity for a short. How much further can it go? Obviously, it did go a bit further later in the morning. I say not later in the morning, but within another hour. But you still got a nice bounce here. But this is one of those trades, right? I've talked about this in a lot of my webinars that I do. I talk about this in my weekly group training, is when you have a divergence, in this case a bullish divergence because it's at the low, and a bullish ratio, whether it's a ratio bounds high or ratio bounds low. That's this blue number, right? Your normal ratio, your normal order flow is this, right? The black number underneath the bar, the 2.1, the 8.23. So this is telling me there's price exhaustion. This is a ratio bounds low. So when I have, a ratio that I like, in the order flow, telling me that is either price exhaustion or price defense. In this case, this is price exhaustion coupled with a divergence. Then that's just an automatic trade, right? So it's a trade I'm looking to get long in anyway. And in this next bar, right, what do we have? We got that value area that's been abandoned. Okay, so I've got a couple of things going for me. Although this bar right here is just sort of an automatic one. To get the next bar having that abandoned value area just gives it a little bit more credence. And, we do manage to rally from, around the 85, 86 level all the way up into the mid 90s here. Okay, but we're running into, this zone up in here. Now this green bar, right, this is a abandoned value area from earlier. This green bar, it actually looks very bullish, right? And I'm going to talk about some of these green bars, like this one here, this one here. Looking at this is the type of bar I'm looking for the market to start to scream upwards, right? Go just, go up, because I'm seeing the momentum picking up. I'm seeing, a stacked buying imbalance in here. I'm seeing, very little counter trade in here. It's almost a sweep, as it's going up, which is nice to see. I'm seeing heavy volume at the top of the bar, and it sort of goes sideways. And then again, another bar, strong positive delta. This time you don't have stacked imbalances. They're a bit spread out. You got 2 and then 1 up here, another 2 here, another 1 up here. That's something that I like to see, and I want to see follow through. Okay, but again, you should already be long from 86. But when I see something like this bar, then this bar, I'm thinking, we hit 4,000. But then it just stalls out up here. Okay, I see supply coming in here in the order flow. You can see that the 269, the 246, which is, not what you like to see. I mean, earlier in the bar, there was some nice aggressive buying. It's a bar that's got a positive delta of 305, but the max delta was plus 905. So it was telling me it was very strong at one point, right? Almost 1,000 positive delta at one point in this bar. And then it just gave it all back. And, well, not all of it back. It settled at just 305. And then it just starts drifting down. Okay, once it starts drifting down, that's your sign to get out. But more importantly, it's your sign that maybe the selling is coming back into the market, right? People say, well, yeah, it's a shooting star candlestick you got to get short on. There's some other things in here like this imbalance. You're seeing some trap traders up in there. And then we come back down. And again, so now keep in mind, right, even though this was bullish here, this divergence and this ratio, I've got a divergence here. I've got a divergence here. And I got those 2 earlier right here, okay? So that's 1, 2, 3, 4 right here at this 80 level, 80 and a quarter. So you just drop in a sell stop at 80 even to get short, okay? Getting long here is an opportunity. Then you should hopefully can recognize that it's not working out in here. Obviously, we see the value area starting to come off a bit, right? Red. Strong negative delta here. But definitely you'd want to get short again this time, right? Should have maybe got short over here at 82. Took a loss and you got long here. Hopefully you made it back in this trade. And then you should still be looking to get short here, right? Around the 80 area. And when we came down and powered through this low, it actually triggered some stops in here. You can see this stacked selling imbalance the 218, the 463, the 94, the 168, the 210. All right, so you got to stop in here at 80. Probably you filled somewhere around 79 and a half, 79 and a quarter, and then it just drops down over the next few minutes. 1, 2, 3, 4 bars, 4 minutes, right down to around the 71-ish area before it goes sideways. Then you got another divergence coming in here. Right, this time you have no ratio. Right, it's just 3.79, so it's just telling you it's regular order flow. Okay, it's not an area to get long off of. Bounces up a little bit, runs into this red candle where you got this abandoned value area, and then it just comes off, tests that low, doesn't hit that low. So while this was looking bearish in here, you should have already been short from up here. Around the 80 area, 79 and a half, down to for me 72. You're looking at this one bar here. It's kind of bearish, right? And forget about that big sharp move up. When you're looking here, right, if you're already short, right, you're not looking to take a fresh short here. If you took your profits, would you want to get short here? Again, you could take the shot. I mean, I still think there's probably some capacity for this market to go lower. But again, if you're getting short here, you still got to have a stop in, right? And it's going to be on the other side of this value area. Then the next bar, right, it comes in and it closes. Now it's a green up candle. Okay, so it started to move away, but this is where you got to be careful, right? If you're trading an abandoned value area, you don't want the market sort of coming back up towards it when you're looking to get short. Okay, what you'd rather see is a red candle coming in here. You'd rather see the price action going down. Now people are going to say, well, it did trade down, right? It traded all the way down to 70. Yes, it did, but the bar is still closing up. So regardless, if you still want to pull the trigger and get short off of this bar, even though it's a green candle, okay, you're getting short at 72. Still got to have a stop up here, 76 and 3/4, 77. So, you're risking 5 points there. And then you're stopped out. Now, the market starts running up, okay? Starts running all the way back up to 86. And then marches right back down. And again, you're getting some, looks like some bullish candles coming in. You got a gap in the value here, gap in the value here, gap in the value here. So you got 3 upward gaps in value. And now I haven't done the studies on this, but I know that, when I say I haven't done the studies, is, I haven't sat down and gone through years of charts looking at the value areas to determine, what percentage fails after 3. But I do know when you get 3 in a row, sort of the power of 3, the market does have a tendency to pull back. Okay, and in this case, it pulled back through all those levels, right? Through this gap, and coming into this gap here. Oftentimes you do get 2, right? But 3 sometimes is a bit overextended, right? Market just got ahead of itself and sort of came back down and filled this gap, and tried to fill this gap. But again, nothing overly bearish in here on this move down. We do come up and then we start to move back down. Now here's a bar. The delta is exactly 0, and people are like, oh my gosh, delta 0. It doesn't mean anything. It's just more of a coincidence that it landed on 0. Could have been +1. It could have been -5. Then, again, nothing screaming at you, get long, get short. And then this bar comes in, okay? You got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 bars where the value is overlapping in here. And then you gap up, right? Gap between this one and this one. You have this value area up here, okay? This bar, and it closes below the value area. That's not a good sign, closing below the value area, right? You have the value area, and it's abandoned, but it's abandoned to the downside. It's a bullish value area because it's a green candle. However, you got a couple bearish things going on in there, right? Sometimes you want to take these things on the surface and say, oh, there's an abandoned value area here. It's green, so it must be bullish. But take it a step further. Don't just take it on the surface. 1, we close below the value area. So we formed our value up here, but now we're rejecting that value area. 2, the next bar doesn't even trade back into it, and it's a red candle. So on the surface, it looks bullish, but when you lift up the carpet to see what's underneath, it's actually very bearish. And you can see how this market sold off. Again, you're not going to know how it's really developing. You have the first sign in here by closing below this value area, and the second sign here as you sell off. Then once this bar is confirmed, and closing down, you should be thinking short, definitely not long, either short or no trade. And from the 74-ish area right down to immediately down to 64, where we make a new low and we have another divergence. Okay, so over here you had another divergence. If you wanted to trade it, you could have put a stop in here, 69.25, 69. Although it did pull back immediately up to 75.5 before selling down. But then it hits this new low here. Now this was interesting, okay, because this low, 940, that's the low of the day, right? That's this low here, right before the market shot up. Okay, so again, you had some, a potential buy in here, or was it over here? Then that short in here. But then this one, what makes this one so special? And again, it doesn't reveal itself almost immediately. But what do you have on this low? Okay, well, yeah, you got the divergence, right? You got the nice positive delta. You've got a nice stacked buying imbalance and another buying imbalance a bit higher. All these thin prints in here, 0, 1, 3, 0, 3. So someone is coming in here aggressively buying off this low, 67, and it proceeds to go up and then sort of pulls back a little bit, pulls back about 50% of this move here, right, from here to here. Just really quick here, let's put this little volume profile. You can see it pulls back, towards the value area of low of this move from this low to this high. And then as it starts to move up, again, for people that like to do retracements, you could sort of do, I don't know what that retracement is, but, for me, I like levels, I like the half back level, and just visually, I think half back is probably right around here, 69.5, sort of a pullback of 50% before going up. But as you start going up, then you see let me close this down here. You can see how it came down to the value area low, traded right below, and then rejected these lower prices here and started moving up. That's how I like to use this value area, this volume profile. I like to take it from lows to swing highs, right? The lows of the day to a swing high, or even, from a swing high to a swing low. Different ways to use it. But as you start going up, okay, now you can see the market. Now you can just sort of see people coming in, tripping over themselves, looking to get long aggressively, right? You see the stacked imbalance here. But more importantly, look at these deltas, 936, 327, 863, 737. What makes these deltas different is they're closing right near our max delta number, which is how max delta, remember, is how strong the aggressive buying was in a bar. Okay, 938 closed at 936, 328 closed at 327, 876 closed at 863, 737 closed right on 737. And more importantly, another important thing to pay attention to, the market internal, is the min delta. So you have max delta and min delta. Min delta tells you how aggressive the sellers were in a bar, at, the most aggressive they were. Just as the max delta tells you how aggressive the buyers were. And here you're seeing -1. So one contract, the aggressive sellers were in control over. 0, -57. Okay, not bad. And then a 0. So not only do you see the aggressive buying dominating in terms of the delta, closing near our strongest readings, but you also see the aggressive sellers never had control over these, basically over this 4-minute period. You can even go 5-minute period here, 6 minutes. And here you have -301, but you got the -1 here, -1, 0, 57, -57 rather, and 0. And it's just tilted more towards the aggressive buying. So you can just see people coming in, aggressive traders coming in. When you see a sign like that, it's, it's bullish. And then you got the other abandoned value area in here, right? And you just sensing, okay, maybe this time we've put in our low, right? Earlier in the day, right, we had this potential buying opportunity. Where was it? This one. I thought this was a legitimate buying opportunity here. But you don't see that sort of same aggression. Many people say, well, you have a stacked imbalance here. You got, some buying imbalances spread out. Okay, that's 2 bars. These deltas are kind of strong. 1144, 1309. Okay, that's 2 bars. But there's no continuation, right? There's nothing else, right? You're just going off of that part. Okay, but you still got, aggressive sellers coming in here, but no follow through in this bar. Okay, whereas here, after you hit the 940, as you start to rally, right, coming in here, it just optically looks more bullish. Okay, and it's, it reaches this previous level here, just sort of goes sideways. Then you're seeing, again, more bullish activity, right? You see the deltas, right? The cyan color field here. I don't need to pay attention to what the number is. All I know is it's bullish in that sense. Right here, I see this is 0, so I know aggressive sellers aren't ever in control in this bar. Here is a -6, right? I see a stacked imbalance here, another couple imbalances here. I see the bar spreading out. The market's looking for liquidity, and then it pops here at 1020, and it just keeps going up, up, up. It just pauses a little bit. I'll say pauses, but goes sideways and runs again, right? Another stacked buying imbalance. I mean, look at this bar, okay? You got the stacked buying imbalance down here. Values up near the top. We're closing up near the top of the bar. It's very similar to this bar. You got all this aggressive buying. You got the buying imbalances here, the stacked buying imbalance below the value area. Look at this bar, right? We close up near the top. Again, very similar. Stacked buying imbalance down here. The value area up near the top. Bars closing up near the top. This bar looks like a smaller version of this bar, and looks like this bar. Okay, so history repeats itself. It's not going to be exactly the same, but when you see this type of activity taking place, act on it. All right, so I hope you guys enjoy this video. Hopefully you get something out of it that you could add to your trading. If you do, be sure to subscribe to the channel and like the video. So thanks everyone. I'll see you guys on the next video. Bye bye.